The rate rise is in and it's 0.25%. The guidance that came with it, very cautious, as is this video, your latest update on the markets from TradeSpot. Hit that like button, subscribe if you're new. The Fed's latest policy rate hike has sent shockwaves through the markets as inflation continues to rise and potential regional bank failures cause spots of turbulence. Despite a cautious approach, the Central Bank Monetary Policy Committee has pushed its policy rate up another 25 basis points to 5.25% in an effort to curb inflation. But will this be enough? The Fed has indicated that it will monitor the situation closely and may need to make additional firming measures to return inflation to a reasonable level over time. Fluffers. Traders all around the world are anxiously waiting to see what the Fed will do at its June meeting. The Fed has already raised rates beyond the 5.1% target from the Summary of Economic Projections, SEP, and the future still looks uncertain. Inflation is predicted to remain well above 5% in the coming months, and with no end in sight, there could be more surprise moves ahead for the Fed and the markets. The recent bank turmoil has added to the uncertainty, and while the Fed has been assuring traders that the US banking system is sound and resilient, tighter credit conditions for households and businesses could have a significant impact on the economy. The committee remains highly attentive to inflation risks, and the extent of these remains uncertain. Despite economic activity expanding at a modest pace in Q1 and job gains remaining robust, the stock market has been volatile. Probability that the federal fund rate will stay at 5.25% based on the current distribution of trades. The FOMC voting members voted unanimously for the 25 basis point rate rise, leaving the cat flap open for further rate hikes. This by no means commits the Fed to pause on their hikes. The traders I'm speaking to need to remain vigilant in the coming months. In the meantime, there is some positive news on the labour market, with ADP's measure of private payrolls in April showing a 296,000 increase versus a predicted rise of 148,000 jobs. Despite some good news, earnings reports have been mixed, with Advanced Micro Devices AMD slumping more than 7% and Starbucks SBUX disappointing investors with their disheartening outlook. Future remains uncertain, and traders need to brace themselves for more ups and downs in the coming months across many of these familiar tickers. All three of the major US stock averages perked up after the restatement, then volatility came in and smacked them down. At close, as we're saying, SPY down 0.69, NDX 0.64, DGI down 0.8, and the VIX spiking 3.15%. So big moves if you were trading at the right time. And important quotes then from Powell and his guidance that I think we should all be taking note of, staying aware of. First up, support for the 25 basis point rate increase was very strong. We shouldn't even be talking about a world in which the US government doesn't pay its bills, he said when asked to address the government debt limit. We on the committee have a view that inflation is going to come down, not so quickly. If that's right, it's not appropriate to cut rates. Inflation in non-housing service remains high. I think you'll see inflation come down and corporate margins coming down, reflecting full competition. It's possible to have a cooling in the labour market without significant damage to the unemployment rate, though he admits this would be against history. And finally, we're not going to get to 3% and drop our tools. Let's now check out the charts and the distribution of probability to help you with your trades. the distribution of probability, and all of the answers that can help you with your trading over the next day and week. Starting on the weekly time frame, price actions back above the 50 simple. It's above the 200 period moving average, positive slope, positive splay. And on the RSI, we've gone through the center line. If we come back down and test that, not so bad. Then a little bit of retracement, perhaps just to that 50 simple or below, where we can see a little bit of a node and price action there, looking at the E-minis in at around 4,03975. That sort of zone. You could easily test that previous support and bounce. That would exceed the 50 simple, but still hold a bullish posturing. Down then to the daily time frame, where you're got a persistent 50 simple above the 200, like on the weekly. Positive slope, positive splay. Price action then, if it does slip any lower, will give you bullish divergence. So you've got a touch of a potential reversal there. You had the reversal divergence at the top side. So if you hold support now, that would be a strong area to retrace from and put in a higher high. Come back and exceeding the 200 period moving average from this point would be testing 4,000. Down to the 4-hour time frame, a really strong move on the 50 simple. A bearish engulfing candle here, a little bit of continuation, fill this previous gap, then perhaps that happens. The 4,100 or just below, wouldn't be ruling that out. And if we move then back up again and exceed this previous high at 44,200, then you'd be saying that this is a really strong bullish trend. You wouldn't worry too much about any gaps there that hadn't been filled, and you'd be looking for price action to test back up at around 43 positive level there. Be a quick move if you did make it after putting in a higher low, which is very possible considering recent price action, despite the fact that you've got a bearish engulfing there. Down to the 1 hour, you can see you've already got a potential bullish engulfing, bearish reversal, bullish reversal divergence, and a 200 period moving average. Whoa, got out there at the end. Does price action, do you hold that 200 period? Quite possibly. Open, close, open, you could be left with an abandoned baby there. A really positive reaction would be anything closing back above 41.50. If you take it back to 41.75 and above that, a little gap there at 41.85, you could go on from there without coming back, and that would be such a positive move. So if you want to learn more about how to do this for yourself, what to trade, when to trade, and how to make the most of it, you can start learning for free on this channel. Every day I've got these videos. And if you appreciate it, please hit the like button so I know to continue doing them, trying out new things recently. You can also join the Discord that I'm a big part of over at www.discord.gg/RockyOutcrop for free. You can join totally for free. And Rocky Outcrop on YouTube also has a fantastic educational playlist. You should check that out. So any help you need, I'm here for you. Thanks very much for tuning in. And if you want to, I do a daily live show every day and give you user links in the description. I'll give you my take on any trade you might have or chart you're looking at. And it'd be great to see you over in a live show someday. Thanks very much. See you later.